Yo, what's up guys? Welcome back to my channel. Today, I'm not actually going to discuss with you guys ICT, nothing like that. The main reason why I wanted to record this video today is to show you guys why all these keywords, support and resistance, supply and demand, fair value gap, sort of mean the same thing essentially. So let's jump onto the charts. I've got a gold chart here which sort of shows us the best example, but let's have price come back through here. So if we go on, I'm not going to go on a weekly, let's just zoom out. So right now we've got gold here, right? At least in the short term from October onwards, we're in a bull run. It's sort of, yeah, it's hard to tell when we zoom out on a daily, but it's definitely on a bull run for the short term, right? We've got it breaking previous highs. So let's go through here. Now, what some of our strategies might be is a break and retest. So what potentially some people could look at is resistance. Resistance being the highest peak of price, at least in, the short term. If we go back, we could say that's resistance, but at least from a daily and this pump here, that is the short-term resistance. And some might mark it as supply. Okay, so really resistance, supply means the same thing. Resistance is just, again, this is my definition, guys, and how I perceive the markets and what I've been taught in the past, but resistance being more so a horizontal line where price will react from versus supply being a zone. I realize sometimes in some people's strategies, the supply has to be a huge engulfing and a reversal of this candle. So essentially it would be like a big bearish candle here over that white one. But for my definitions and for the purpose of this video, we'll leave supply as a zone from the highest point. So we go here, it touches that zone. We could do a short trade here, but as you guys will see, we know that price breaks out now. So overall bullish, breaking high, previous highs. It's now broken a previous high again. We want to get into this trade and trigger into this trade. So price comes back down here. If we played both support and, if we played this as now a support zone, or what I mean by that, a demand zone, a support price, we would have got chopped out, right? Which is fine, things happen, we would have got chopped out, okay? But if we keep going, price actually pumps up from here, we have an engulfing, okay? So we'll still keep this, let's just keep the zone, let's take off this horizontal line here if I can. Hopefully that's it. Nope. Okay, we'll just redraw this zone. So that was a previous supply, now turned demand, right? And if we want to have it here now a bit larger, because this price is obviously reacting off it, let's have that marked up and let's continue the price. So price comes up, it's reacted off this demand zone. What some other people might see is this. They might see a fair value gap and say, hey, look, there's a fair value gap that needs to be filled if I'm trading ICT concepts. Well, where does it come into? It comes straight into this zone here, which we've named as a now demand zone. So we could say, all right, if our trading rules are, if it touches the zone, if it touches this fair value gap, I'll get in. I'll put my stop loss under where the fair value gap came from or where the zone is. Maybe instead of putting it under here, we might want to put it under here just to be safe, right? Again, we've got options. And then we wait for price to move in our direction. Obviously, your rules in terms of where you take profit, if you trail, that will change. But essentially, we're all trading the same fucking zone. Right, we're trading where price in the past reacted from. We're making a prediction that it will most likely statistically react off this same zone and give us a better reward over a short-term risk. So if we've taken this trade initially, let's say we wanted to make a short play, we wanted to see a reversal. So actually no, my apologies. Let's just say we wanted a continuation, but we've got in early here, we didn't know where price was, we put stop loss here, we get chopped out, right? That's 1 hour gone. We're still keeping this zone here. We're knowing that price reacts because it has jumped off of this zone, and we've made 6R here. Using the same zone, even though we lost once, we still won 6 here. We're up 5R essentially. Using the same zone, the same fair value gap, the same support and resistance, the same supply and demand. It's all the same thing to me. And that's the sort of message I want to get across to you guys. I think have your rules, have your defined rules, but just know all these keywords. I've got the right strategy. I've got the only strategy that can make money. That's all fucking bullshit. We're using the same price. People, if you've got a bit of common sense and you've got, I wouldn't say coordination, but you've got pattern recognition, everyone will spot the same shit, right? So keep your rules. Try not overcomplicate it, because in theory we're all sort of doing the same thing. We just need discipline. We need to trade off correct zones. We need to make sure our reward is higher than our risk, or our win rate's higher than our loss rate, and use the math, use the statistics to over time be profitable. So that's sort of my 2 cents, guys. I think